Greetings of the day. Welcome to book Principles of Insurance IC01 Chapter 9 General Insurance Products. Now we have seen in earlier chapter various life products, and now we have to see the general insurance, that is a non-life products. So there are various types of non-life products, and say for example the people having different type of assets, maybe factory, maybe motor, automobile, or uh, uh, the residential properties, the buildings, the plant, machinery. And then there are various types of perils which can damage the property, be it a fire, earthquake, floods, storm. So non-life insurance companies, they are offering various type of products which is insured against financial losses due to accidents and hospitalization, etc. You will definitely learn various products, and then this is the basic principles, and then you have to specialize whether it is in marine, fire, machinery breakdown, and such other products. So in this particular chapter, you will know about the products offered by non-life insurance companies. You have to understand the features of fire insurance and marine insurance products. You have also to learn about the various insurance products offered under the miscellaneous categories. You see, earlier the marine and fire was the major portfolio. But nowadays, if you see the health insurance and then the mediclaims, health insurance, this is the major portfolio under general insurance. Also, motor policies, automobile policies, third party liability policies in motor vehicle accidents, etc. It has become a major portion. The fire, marine, maybe it is in the range of 5.55%, but the major portfolio is health and major portfolio is automobile. You should understand different types of products. Now, basically, the non-life insurance products, it can be divided into three groups. The one is marine insurance, the other is fire insurance, and the third is miscellaneous insurance. So what are the products in marine insurance? Basically, in marine insurance, there are two types of policies are issued. One is marine cargo. So whenever the cargo is in transit, be it air or sea or by road or by rail or by courier, whatever is the mode of transportation, the cargo is covered under the marine cargo policy. There are different type of policies. It is a specialized subject. Then there is a marine hull. What is marine hull? The ships on the vessels, the merchant ships are called vessels and warships are called ships. So merchant vessels carrying cargo, different type of cargo, bulk, dry bulk, liquid bulk, containerized or dimensional, and different type of cargo, break bulk. So this everything is covered. It is carried by vessels, merchant vessels. These merchant vessels are covered under hull and machinery policy. The structure of the vessel, it is known as a hull, and it has machinery. It can be without machinery, hull can be without machinery, but then it is known as a dam. So in marine, the first thing is marine hull policy and marine cargo policy, which is under marine insurance policy. Then what else? Then there is a fire insurance. The fire insurance is covering basically, there is a special fire policy with a special perils. Now the fire policy is also covering the cyclone, storms, flood, earthquake, the impact, the contamination during storage. So there are various types of risk which is covered. That is the reason it is called fire policy and special perils policy. So there are various other perils, they are covered under the fire insurance policy. These policies are named peril policy. So whatever is covered, it is listed out in the policy. So fire policy, it is a second group. Which is the third group? Third group is a miscellaneous. There is a various range of policies which is covered under the miscellaneous section. So what all are that? Fidelity guarantee. That means somebody from your organization is making a fraud. So there is a fidelity guarantee. Then there is a overseas medical insurance. Whenever we people are traveling it to foreign overseas, and then in overseas the medical is very expensive, and that is the reason whenever any person from India is going to overseas, then the overseas medical insurance is taken, which is coming under the miscellaneous section. Then there is a workman compensation. So this is also factory having different type of workmen, and there would be a workman compensation policy. Then there is a engineering insurance. So during erection of the plant, during not transportation, but during working of this particular plant, there could be failure of machinery, there could be breakdown of machinery, and then everything is covered under the engineering insurance policy. Then the way there is a marine hull policy, similarly there is a aviation insurance where different types of aircrafts are also covered under the helicopters, aircraft, and all flying objects, you can say, they are covered under the aviation policy. In overseas country, the ACVs, that is air cushion vehicles, which is basically a ship which is also which can come in flying mode, or the seaplanes, etc., they are also covered under the aviation insurance. The hovercrafts in Indian market are covered under the marine hull policy. But then this is the aviation insurance comes under miscellaneous. Then there are other miscellaneous policies are there. So there could be a transporters liability policy, the container operators liability policy. Then there is a motor insurance. The automobiles are covered for the own damage and third party liabilities. So they are also coming under the miscellaneous section. Then there are port policies, port package policy. So this is also coming under the miscellaneous. Then there are personal accident insurance. You can always have a personal accident insurance, which is also coming under the general insurance. Then there is a health insurance, Mediclaim policies, and then there is a liability insurance. What is liability insurance? That maybe as a contractor, I have certain liabilities if I don't perform my duties properly. The transporter has liability, the carrier has liability. So there are various things under contract, there are liabilities, and such liabilities can be covered, like the doctors. The doctors have professional indemnity coverage provided. The engineer, the architect, the civil engineer, they can always have the professional indemnity policy. And then if at all there are certain problems in the professional field, the insurance company would take care of that. So marine cargo insurance, this is providing the cover for the cargo, the goods in transit. It can be by sea, air, rail, road, or by post, by courier. It can be export, it can be import, it can be shipment in inland transit, it can be by inland vessels, it can be by air, inland air, it can be by any mode of transportation, it can be a mixed mode of transportation. So there are different type of risk. There could be fire, there could be explosion, there could be grounding, stranding of the vessel, there could be sinking of the vessel, there could be road accidents, there could be rail accident, there could be theft, there could be pilferage. There are various types of losses which can take place in transit to the cargo. That is taken care by marine cargo insurance. Then there are war perils, there are strike perils, riots, civil commotion. This is also added as a added peril which is covered under the policy. Then there is a inland transit policies by rail, by road, which is covering the risk of fire, breakage of bridges, derailment. These policies cover the risk during the duration of transit only. So commencement of risk and termination of risk is defined in the policy clauses which is given to the insured. The export and import shipments are covered under the terms of Institute Cargo Clauses, ICC. There are A, B, C clauses, and these clauses are by Institute of London underwriters. According to the international practice, local clauses are used for inland transit only. You see, it is approved by GI Council, and then you should know about marine cargo insurance. Similarly, there is a marine hull insurance. As I said that the ships, the vessels, merchant vessels, they are known as the hull and machinery policy. They are covered under the hull and machinery policy. So hull insurance, the structure of the vessel is known as the hull. So hull insurance covers loss or damage to ocean-going ships and other vessels such as fishing vessels, sailing vessels. The risks covered include maritime perils, fire, explosion, piracy, accidents in loading and discharging of the cargo, the crew negligence, the latent defect becoming patent, various perils. It is a named peril policy. Then the war and strikes are also covered under the Government of India War and Risk Scheme, which is a voluntary scheme for the ship owners. The hull policies are generally issued for a period of 12 months. Even the cargo policies, there could be for specific voyage, and it could be the annual. You have to give declaration to the insurance company as prescribed in the policy. Hull policy is an annual policy. It can be voyage policy also. Okay, and then cover is provided under the terms of the institute time clauses. Hull, this is also the institute voyage clauses. Hull, it is formulated by the institute, the Insurance Institute of London, the Institute of London underwriter, which are used internationally. I said internationally in these Commonwealth countries because American clauses are different, Norwegian clauses are different. So there are different, French clauses are different. So there are different clauses used by Canadian have their own clauses. The Australian they have their, but then generally in Commonwealth countries you will find the ICC Institute cargo clauses and Institute time clauses. The fire insurance is covering these policies. They provide cover for financial losses due to damage to property arising out of fire, explosions. Then these fire policies, they are also extended to cover damage through impact of vehicles, the riots, typhoons, cyclones, strikes, malicious act, floods, contamination of liquid bulk in storage. So there are various add-on covers provided in the fire policy. The motor insurance deals with the insurance of motorized vehicles on road, whether used for private comfort or public service, whether carrying passengers or goods. As per Motor Vehicle Act, every vehicle plying in Indian roads should be insured for liability. That is the third party liability, including property damage. So motor insurance may cover damage to vehicles, injury or death to persons, and damage to property belonging to third parties. Premium is depending upon the specification of vehicle as well as on the usage, then also the age of the vessel, the value of the vessel. There are various restrictions provided, the areas in which vehicle may be used, the nature of usage, whether it is a private or public usage, then it is adherence to the laws relating to driver needing a license, permit required for the carriage of goods and passengers, etc. Premium is not depending upon these factors. You have to have, so it should be a legal venture. It should not be a it should be as per Marine Vehicle Act and legal venture. There are personal accident policies which is covering death or disablement arising out of accidents of any kind, which is caused by external violent and visible means. In the case of personal accident policies, there is no need for assessment of risk except on the factor of occupation. The conditions are standard. The policy can cover consequential cost, medical expenses, medical care, loss of income due to disability leading to absence from the workplace. So health insurance plans are individual policy. There can be family floater policy. There can be group health insurance policy. So health insurance covers the treatment cost which require hospitalization, including domiciliary treatment. Health insurance can indemnify these hospital costs or provide fixed benefits. The liability insurance. So liability insurance under general insurance, which is providing the indemnity, or you can say the protection against financial losses payable under the law. for injuries to third parties or their property. The policy covers indemnity for professionals providing services such as doctors, lawyers, accountants, engineers, surveyors. These professionals run the risk of being charged with negligence and subsequent liability for damages. Liability insurance can be broadly categorized into public liability, industrial and non-industrial, the product liability, professional indemnity, the errors and omissions in the policy, while the first three cover death, disablement due to the insured negligence, errors and omission policies cover financial losses due to negligent action of professionals like chartered accountants, surgeons, engineers, and such other professionals. Even carriers' legal liability. The carrier is legally liable for the losses which is attributable to their negligence or for their defaults. And these are also covered under this can be covered under there is a port package policies, but there are liabilities attributed in the ports. So these are things covered under the liability insurance. So under miscellaneous policy, there is a fidelity guarantee. So fidelity guarantee covers the risk related to dishonesty, fraud, and embezzlement of the employees, etc. This is protecting from the losses of cash and securities. Then there are overseas medical insurance. I said that whenever somebody is going to foreign, the medical expenses are very, very costly. And the medical insurance policy is covering medical expenses incurred while traveling abroad. Hospital bills are paid by the insurance representatives directly. The policy is also covering the loss of baggage or passport during overseas travel. This policy is meant for Indian residents traveling abroad for specified purpose like business, studies, holidays, or employment. Then there is a workman compensation insurance. This is covering the compensation that is to be paid by the employer to the employee for death or disablement or the injuries as per the Workman Compensation Act 1926 for accident with the work. The engineering insurance, this is including the several kinds of risk, which is covering like say risk cover for the contractors in civil engineering projects, erection of electrical plants, breakdown of machineries, and the consequential losses of profit, etc. Delay in startup of the projects is also covered under the sub branch of miscellaneous insurance. So these are the lot of things covered under the miscellaneous insurance policies under general insurance. Then the machinery breakdown, for example, boiler and pressure vessels plant. These policies are also covering other than by fire caused by explosion, that is a boiler or pressure vessel plant. There can be implosion to the plant and it is damaging surrounding property of the insured and third party liability. This part of engineering, this is a part of engineering insurance. Then there is a aviation insurance which is covering damage to aircraft, liabilities of the freights, passengers and third parties. Aviation insurance, it is a contract for finalized after considerable negotiations on premium rates and are reinsured. What is reinsurance? That the insurance company is again placing this particular portfolio what they have accepted with the other the foreign-based underwriter and also Indian-based, that is a General Insurance Corporation. They are the leading reinsurers in Indian market. Then there is an individual all risk policy for oil and gas, satellite. These are also specialized insurances, and under industrial all risk policy, it is a package policy which is covering fire, burglary, machinery breakdown, business interruption, or the combination of various things. Then there are other miscellaneous insurances are also there. They are including burglary, loss of baggage during travel, householder's effect, shopkeeper's business, banker's indemnity, horses, bees, cattle, poultry, plantation, event, which is which is insurancing which insurances and other specialized insurance like the indemnity, theft cover, loss of credit and PAN card, etc., and losses thereof are being given in given today. So these are very important aspects of the insurance. We can summarize this that non-life insurance products are bifurcated into three major categories: fire, marine, and miscellaneous. Miscellaneous category is including motor, health, personal accident, liability insurance, and various other products. Marine insurance is further classified into marine cargo insurance and marine hull insurance. Motor insurance may cover damage to vehicles, injury or death of person, and damage to property belonging to third parties. Personal accident policies cover death or disablement arising out of accidents of any kind which is caused by external, violent and visible means. Healthcare policies are available in three variants: individual health policy, group health insurance policy, and family floater policy. So various policies are available for that. Now you look at the uh, uh, this is the end of this particular chapter number 9. All the contents of this video are only for general information or use. They do not constitute advice and should not be relied upon in making or refraining from making any decision. In case of any omission or discrepancy, information in the original records will be final and binding. It is also not guaranteed that information in this video is up to date and ultimate. I have prepared this presentation for education purpose to best of my knowledge and ability. Thank you very much. This is the end of chapter 9. All the best for principles of insurance IC01 paper, which is the multiple choice questions. Thank you. Thank you very much.